Barbara Corcoran said that if rates come down 1%, prices could go up possibly 10%. I'm going to break down the likelihood of this and exactly what she's talking about next. So if you get some value out of this, you like what you hear, make sure to subscribe to the channel. And if you want to schedule a call with our team about how to navigate the current environment and understand what she's talking about, you can do that with the link in the comments. Barbara Corcoran was on Fox Business about 6 months ago, and this quote is still super relevant, where she said that if rates come down 1%, prices could go up another 10%. And while that sounds incredible, it really speaks to the amount of demand in the marketplace right now. And there's a chart out there that our friends at Keeping Current Matters have put together where it's a dark red, light green, dark green chart. I'll have Nick put it up in the video here, where when rates get below that 7% range, you see buyer interest start to turn green, right? Think red stoplight, green go light. When it's above 7%, you see it turn red. And when it gets to 7.5, it's a darker red. So her point is valid because there's so much demand out there for housing right now. We know the reasons behind it. Population growth has changed. There's more 30-year-olds than ever in the country. And the reality is that while this is a scary thing to hear from her, what she identifies this time as a great time to buy because there will be more competition if these rates come down. We're not saying these rates are making it an awesome time to buy, and we know the affordability challenge is. It's that prices are going to continue to go up even if rates stay where they are or do come down. And to give you an idea what the likelihood of this happening, when we're filming this video, rates are coming in at like 7 1/8. We're going to put up the predictions from 26 different entities, economists, banks that show the expectation is by the end of the year, we're going to see rates at about 6.34%. That's the average of all of these. Now, some of these predictions to me aren't that great. Seeing rates in the high fives by the end of the year, I don't see any way that happens. 6.34 is the average. And if I was to guess, I would guess the over and pick the over of that 6.34%, which we did on one of the podcasts that we film here. Because if you look at what's happening in the economy right now, the Fed just met a couple weeks ago. They didn't bring down rates. They have a more cautious approach than what they had at the end of last year. And this is going to be the environment that we're in. Zillow's chief economist, Skylar Olson, said that it could be a bumpy ride in 2025 when it comes to rates because of the fact that they're in these low sevens, high six range, and they're probably going to stay there for a while. So knowing that's what's going on and knowing that if rates did come down substantially, like Barbara Corcoran said, we would see a ton of demand flood the market. If you're thinking about selling or buying a home right now, the thing you need to think about is that if you're waiting for rates to come down, something really bad would have to happen. Massive job loss. The Fed is targeting two things right now: inflation at 2%, and they're looking at the labor market. If there was massive job loss, that's when you might see the Fed start to bring rates down. I don't want to see massive job loss. That's not a good thing for a lot of people. You think about the last time rates did come down, we saw a financial crash that was unprecedented in 2008, and we saw a global pandemic in 2020. So the things that causes these rates to come down are not good. And if you look at the average 30-year fixed rate over the past 50 years, since they started tracking this stuff, the average is 7.73%. So the point is that we know where rates are headed. We know what it would take for rates to dramatically come down. And looking at all of this here, it tells me a few things. And the main takeaway is you're not going to be able to time the market. The reasons to make a move, if you're thinking about selling or you're thinking about buying, are it's best for you and your household. Maybe you want to get closer to your kids. Maybe you want to get into a home that's more manageable. Your current home's too big. Maybe it's financially too much money for you. Maybe you need more space and you've got 3 kids in a 2-bedroom condo, right? That can be really painful. Maybe there's a household change. You have a divorce happening. You're getting relocated for your job. Those are the reasons that you want to target a move, because these rates are so unpredictable. And we know where the average trends over the past 5 decades, that if we're trying to wait for rates to come down, we don't know when that's going to happen, and something bad would have to happen in the U.S. or globally for that to occur. So if you're considering a move, the main reason to do it is because it works for your household. And if you get to that point, you realize, hey, this is the right move for our household. That's when you want to collect information about what homes are selling for in your neighborhood. What's the plan to get me the absolute best price? How can I target properties and maybe find a better opportunity on the market? There's lots of ways to do that. Target homes with high days on market. Look at adjacent communities. Hire an agent who's going to target off-market properties for you. These are the strategies you need to hear about and why it's important to hire an agent who is going to have a plan, who can clarify and effectively communicate all these market conditions to you so you can make a great decision and then see if it's the right time for your household to actually do it. So forget what Barbara Corcoran's saying. It's accurate. I totally agree with her. Look at what's best for you and then figure out your real estate decisions from there.